we like our clients to understand their numbers, and as such I'm doing a wee set of videos on some of the accountancy jargon that's out there. Some of it might seem like simple stuff to some people, but for other people hopefully this is useful. The first thing we'll look at is gross and net profit, and what's the difference between the two of them. First thing is, we've got our sales at the top. Now, it might also be called turnover, or revenue, or income, depending on what your accounts say. In this instance, we've got 500,000. Now, assuming this business is providing vatable supplies, that is a figure exclusive of VAT as it's shown in the accounts. So for example, if you sell something for £120 including VAT, £20 of that is VAT, £100 is the sales price which goes through your profit and loss account. Cost of sales are the costs directly attributable to generating these sales. So for example, if I bought flip charts, I bought the stand, I bought pens, they're all direct costs. If I spend money on someone pulling them all together and packaging them up, that's a direct cost, and then it gets sold. All the costs of those different items, of the labour, go into my direct costs because they're directly attributable to that sale. So in this case, 300,000, we've got a gross profit of £200,000. And I'll explain why gross profit is so important to track in a later video. Here we've got our overheads, so that's things that aren't necessarily attributable to that profit. Things like your rent, your rates, your heat and light, everyday running of the business. Maybe some admin expenses if you've got a financial controller or you've got someone answering the phones. You can't necessarily attribute them to a sale, and therefore they're in your overheads. In this case, 150,000, leaving us with a net profit of £50,000. Now this is what you'll pay your tax in, although there's a whole lot of different rules surrounding tax and the profits, so I'll cover that off in a later series.